So the Federal Reserve met last week. I'm sure you've heard by now. On September 8th at their meeting, they actually cut their base rate by 0.5%, 50 basis points, or as we say in the industry, 50 bips. Now there's a lot of misinformation going around about what exactly happened and what this means if you're looking to buy or sell a home. What's up, guys? It's Michael Baird with the Baird Group LPT Realty. Hey, so obviously great news that the Fed is starting to soften their stance on rates. It was the first rate cut by the Fed since early 2020, so we've been 4.5 years without any good news in that front. And finally, they said enough is enough. We want to cut the rate and start getting the economy back on track, hopefully. Well, funny thing is, when they cut their base rate by 0.5%, mortgage rates actually did not come down at all. They've actually gone up a little bit since then, and we're looking back almost a week now. So why is that the case? And if you're hearing anybody say that mortgage rates came down 0.5 percentage point because the Fed cut their rate, it's simply not true. So the mortgage market, mortgage rates tend to look in advance. So over the past 8 weeks, rates have come down at about 0.5%, kind of in anticipation of this Fed meeting and what they were going to do. So all of that cut was really baked in already. And looking forward, we're probably going to see rates continue to come down because we're looking at the Fed cutting rates over the next 4 or 5 meetings every single time. So the next Fed meeting is November 7th. What happens in November? Obviously, we have an election on November 5th, and we have the Fed meeting on November 7th. So we're looking at that kind of as an inflection point. A lot of people are putting their plans on hold until after the election, no matter what side they're on. And then that Fed meeting, we're expecting to see a decrease in rates again of at least 1/4 point, potentially another 0.5 point. So we're probably going to see mortgage rates go down in anticipation of that meeting. Once we get past the election, once those rates come down even more, we're really expecting a boom in the market. So if you've been a little confused with what went on with that Fed meeting, what it means for you, it is a good sign of things to come. Rates did not jump down right after that meeting, but they're expected to continue to come down, and we fully expect to see mortgage rates in the mid, potentially low 5s by next year. So if you're on the fence, thinking about buying a home, thinking about getting your home on the market, we're going to continue to see more competition coming into the market, more buyers getting off the fence, and more opportunity in general out there. So keep an eye on the Fed meetings, but know that mortgage rates typically precede the meeting, and then demand typically comes after the meeting. So if you're keeping an eye on the market, you want to know what's going on, reach out to us here at the Baird Group anytime. And one other thing to keep in mind is that every time rates go down 1%, another 5 million people get into the market to buy a home. So if we see rates coming down into the next year, into the mid 5s, that's about 1% lower than where we are. So there's gonna be some competition. Guys, if you have any questions about the real estate market, about what rates are doing, about what the Fed is doing, reach out anytime. We are happy to help clear up any cloudiness and chat real estate any day of the week. Again, guys, Michael Baird with the Baird Group LPT Realty.